I think it was Sunday, I posted the daily and said I thought it was going to move up pretty big. And that was, uh, yeah, I think that was down here somewhere. Um, and unfortunately, I think I like tried to enter and got stopped out somewhere around here before it ran. And really, we should have just bought spot or 5x because it was just such a bullish chart. Um, so what I did yesterday was these fib levels. Now everybody has their own way of using fib levels. I'm just gonna turn off some of these indicators so that it's a bit cleaner. Um, Essentially, the fib tool on TradingView, we kind of covered this last week, but it wasn't recorded. All it's doing is just automatically calculating basically percentage of moves. And, if you're looking at something like Elliott wave theory, you know, when you look at Elliott wave theory, I think initially it seems like nonsense because we we don't want to believe that humans are that predictable. But in the end, the reality is these patterns end up repeating themselves, and human nature is, pretty much always going to be very similar. So when you use a fib tool, it's kind of the same theory. A price point will retrace or move a certain percentage amount, and it'll be pretty predictable. So yesterday, when we were talking about OP, this move right here, which was a pretty massive move that we kind of caught on Bitcoin, these fib levels play out really, really well for me on reversals. So when you set up your fib level on TradingView, you can pick whatever levels you want. So the golden pocket is 6.618 to 0.66, which means a 66 to 62 to 66% retrace on a move. You're almost always going to get a pretty solid reaction at the golden pocket. I like the 0.236 is kind of my go-to reversal level. So the way I would use the 0.236 is on something like Bitcoin, for example. If you really look at it, so you would take your fib tool, and once you click on it, like you're going to go to your start point, which is the top of a move down to the bottom of the move, right? So when you look at the 0.236, to me, after a significant move on Bitcoin, reclaiming that 0.236 level, to me, is where I would say, okay, we're bullish, right? So if you had tried to catch this move right here, for example, right to that first big wick, the price went right up to that 0.236 level and just rejected. So when you're trying to catch this reversal, you can try to knife catch it, and it's extremely risky, or you can wait for confirmation. The confirmation on this move for me would have been reclaiming 23.3, and this, we're talking about June 13th, which it just didn't. So the 0.236 is my key level for confirmation of a reversal. Until that level is broken, I don't feel comfortable with the reversal sticking. So going back to OP yesterday, for example, the move was pretty straightforward, right? So um, the original move, at least. So you always go from left to right, and it'll automatically do it. As long as you stick to left to right, it'll automatically set up um, your levels, so it can be long or short. As long as you stick to that left to right, it all kind of works itself out. So OP made this move. Fib levels will play out on whatever time frame you want it to. Obviously, it's just like everything else. The higher the time frame, the higher the probability that it's significant, right? So OP moved up, and I tried to take this short probably 10 times, and made some money, and then failed out. And I kept saying, like, watch that 0.77 level. Essentially, once that level was lost, it retraced to the golden pocket. And it's not perfect, but you can see that that level has gotten a reaction. So I'm pretty sure if we do the next move, you'll see a very similar result. So you go from the bottom to the top of the move, and you can see that once it lost this level, it had a pretty significant move, and again, it bounced at that golden pocket. It's not a scientific thing. It's no different than when you guys are looking at patterns. Like, you can look at a bull flag or a bear flag or an inverse head and shoulder, really whatever you want to look at. At the end of the day, these fib levels are very good because a lot of people are looking at them, because a lot of computer programs and algos are automatically calculating them and entering or exiting based on them. And so it's just a matter of identifying places in which, because of these fib levels, a lot of trading is going to happen at that golden pocket or at that 0.236 level because of the fact that a lot of people are looking at it. If everybody decided to trade off of moon cycles, or everybody decided to trade off of, Cramer's tweets, that would be the best indicator in the moment, right? Like, this is just because people are looking at it. And again, it's just calculating percentages. So the big one, if you're going to use this tool, is everybody looks at the golden pocket. But if you Google it, you'll see that, like, 786 is a big level. A lot of people look at the 382 level or the 50% level. The other thing you can do with this tool that's really cool is just kind of estimate potential moves. So if you have something that's just really, really ripping, you can go in and say, okay, well, on this, for example, if we were to take this move, right, and then we say, okay, well, where could it go if it does bounce? You could say, what would it be actually? Negative. Zoom out. So that would be your target, because that would be based on that move. That would be your 1.618 level. So you can extend it the other way to measure out levels at continuation, and then you would look it up. Like, right here, this is the level that it would have given me as a target, and it matches up like so ridiculously perfectly with that bounce, this bounce, and so it's just additional confluence, if you're trading OP, you want to target that 1.02 level. I mean, that's where it's going to go if it continues to go up, with a very decent degree of likelihood. So the other way, and again, everybody uses these things a little bit different. Some people have like 10 or 15 levels on their fib tools that they watch. I just like to keep mine simple. And a lot of times, like for OP, I was within like 0.002 of that golden pocket level when I eyeballed it on my phone. And so it's just something that you have to kind of keep in mind, that even though I'm not necessarily charting these out all the time, it's something that over time you just get really good at seeing, okay, well, there's your 65% retrace. So the other way I use this tool is to do ranges. So if we say, let's say this is our range, I would go back and I would take these out and I would do this one, this one, this one, and this one. And this one. All right. So what I've done here is basically, this is my range, right? And I would actually change the colors on these. So I would do white and probably orange. This is our range, right? And the thing with ranges is the same thing as everything else. Like these are going to get reactions any way you kind of look at it, because people are looking at them. So it's just a really easy way to draw out midpoints, because if this is our range, you can see right here, like you could have drawn this range back here on, at the very least, June 30th, and look at the reaction at the midpoint between the sections, and then again the midpoint of the entire range. So if you're struggling with, are we still in a range? If these levels are getting reactions, we are 100% still in a range. And the fib tool just kind of lets you calculate that out. You can kind of mess with the colors. You can mess with which way the lines are. Sometimes I don't even have the lines extended. And I just leave the levels like that. But for the most part, when I'm using fibs, I'm pretty much just looking at the golden pocket and the .236. There's a bunch of really good videos on how to use this stuff. But for me, I wouldn't use the fib tool necessarily on Bitcoin because we're in a range. The fib tool for the reversals works best when you're trending. And then obviously the midpoints when you're not trending or in a range. So that's the basic overview of how I use them. Does anybody have any questions, or is there anybody even on? I don't know. But I did try to record it, so I'll post it a little later today. And if anybody has any questions, just tag me and I'll answer. A lot of the fibs is just a matter of just start using it, start charting it out. I usually have it as my quick set, and kind of take it from there. I'm watching this C98 currently.
So a quick question for you.
Okay.
Um, I've tried to use them before, and granted, I'm driving to work and trying to watch on my phone at the same time. But the extension versus the retracement. Mostly, you were saying basically in ranges you go with the retracement, but if it's trending, you go with the extension.
Yeah. So like when I'm trading something that's in a range, I just mark out the midpoint. Like really, I'm looking for the midpoints, in that range, not so much the extension or retracement. But I mean,
Okay.
it's almost like it's all the same. Like at the end of the day, if it's a move up, it's a retracement. If it's a move down, I mean, I guess it can extend either way. But yeah, I'm looking at retracement or extension in terms of things that are breaking out of their range,
Right.
and then for Bitcoin, it's it's just ranging. So you really just want to mark out those Monday levels, those weekly levels, daily levels, and then that mid range point and the mid range of the mid range, because the bigger the range is, the more important those that 25% and 75% becomes. Um,
Yeah.
but yeah, Bitcoin's not it's not moving out of that range. I don't think so. There's no sense in trying to do the extension or retracement.
Right. And when you do kind of whenever you throw your fibs on your chart of trading view, like I found that when I put them on there, all of a sudden there's a lot of crap on my chart. All of a sudden, is there a setting that it can be a little neater and just have kind of lines, or do you basically kind of do the fib tool, put in like throw in like horizontal lines to match where they are, and then get rid of the fib tool? Like, how do you usually kind of put out there for just so that your chart doesn't get cluttered? Because yours are always really neat whenever you post them.
Yeah, so that's one of the reasons I took out. I only really have two levels. One of the things that I'll do sometimes is um, I'll have a like for Bitcoin, for example, I have six charts. I've got Bybit, BingX, Binance, Coinbase, KuCoin, um, and sometimes, like if I'm just doing an example, I'll go to one of those, which is just a completely clean chart, and draw them.
Mhm.
But for my main ones, I just don't extend them. So on the settings, you can extend the levels right or left, and so
Yeah.
I just I don't extend them at all. And you can even take the lines out and just leave the levels in terms of numbers. But most of the
Right.
time, I'll just if I really think it's a very key level, like, and you probably can't see this, but on I just did it on C98, like
Yeah.
that 236 level just matches up so perfect with the breakout level that would
Mhm.
be a level that I would probably just mark out, and that's really the only level I care about, because I don't need the fib in this situation, because the fib is just giving me confluence on the level that I would have already wanted to see, which is the exact breakout level. So like in
Right.
this situation, I would just delete it, because it doesn't add anything other than giving me confluence for that retest if it bounces at that level.
Right.
But a lot of times I honestly I eyeball it. So my chart's clean
Right.
because I'm looking at it and I'm estimating it, and I never actually draw it out.
Right.
Um,
Okay. Thank you.
but yeah, you can if it's a issue of confluence, like on that OP chart where I had the point 1.02, like that's that I'm just gonna add a line to, because that level is just too good.
Right.